Hello again, my beautiful people. We're back on another episode with Gracie Word, where Grace speaks. Okay. Now, in the last video, we defined what accounting was, and I gave a kind of like a crash, a quick run through of how to set up an accounting system. But good news, in the next series of videos, I'll be going a little bit detailed in each step involved in setting up an accounting system. Okay, so if that's good and you'd like to follow this series and you haven't already subscribed, please do that right now. Just hit the subscribe button right there, turn on the notification bell so you get notified as soon as a video is dropped, and of course invite others to also subscribe, share this video. Now let's get into it. Okay, we said you have to define an accounting period, and an accounting period is a time frame over which you want to prepare your accounts. This is purely there is no particular time frame rule per se. You can go weekly if you wish. You can prepare your accounts weekly, you can prepare monthly, you can prepare bi-monthly, you can prepare your accounts yearly even. Okay, but the trick to it is this. You know, mathematically they say the more the data, the better the information um prepared, right? So you'd have to pick a time frame that is not so short, so you can capture a lot of transactions. Okay, now that's one. Then two, depending on your kind of business, if your business is still small, you want to know how profitable it is. You don't have the stability that big companies do that go a year, so you'd want to pick something in between, something that is a bit comfortable. Okay, so I would suggest you go 2 months or quarterly, which is every 3 months. Okay, it's for small businesses. That is my personal recommendation. Okay, now another thing you'd look at when you're picking a time frame, when you're setting an accounting period, is make sure it is an accounting period that you can be committed to. Make sure it's an accounting period you can be faithful to. Don't go cheating on it, okay? Because the whole point of preparing, the whole point of accounting is providing information that is valuable to you. So if you are not consistent, and like we defined, accounting involves consistency, okay? So you have to pick something that you can be consistent with. That's another trick, okay? You have to put all of this in consideration when you're determining your accounting period. You also have to consider if what you're doing is a service business or a goods business. For a goods business, you have to look at how frequent your transactions are. Okay, if you have very frequent transactions, which means that over a period of a month you'd have large transactions to account for, you can go ahead and prepare monthly. Okay, but if your transactions are sparse, like you have maybe just 6 transactions in a month, hello, that wouldn't really give you what you're looking for. You wouldn't really be able to determine the profitability of your business if you use a 1 month time frame. So all of this have to be put into consideration to determine an accounting period. Okay, that would be all for this video. See you next time.